Hi guys, so I'm back with another video. I love coming to these little coffee shops to record videos. It gets me out of a comfortable mood in my home. But no, seriously, we're gonna get down to the nitty-gritty today, y'all. And I've been studying a new market structure analysis when I am looking at the charts in the morning, mainly because I wanted to go a little bit more in depth to really understand where price is going, and it kind of helps me deal with changing market conditions. I feel like this, of course, is not like, oh my goodness, this is something that's going to never make you lose a trade again, because that's just a part of the game. You have to lose something or you have to risk something to make something, and that's just a part of it in general. Something that I have been working on, I guess I can just kind of like verbally explain it. So this is what I've been doing. So basically I've been kind of deepening my market structure analysis, the way I look at the market in the morning, so I know exactly kind of where I'm at when it comes time for me to take a trade after market opens, right? So basically what I've been doing, thank you so much. So pretty much what I have been doing so far, the entry strategy is still the same. I'm still using supply and demand, of course. Supply and demand is like my holy grail. We're locked in for life. But something that I have been doing is adding more confluence to my market analysis, basically taking supply and demand to my bigger time frame. So what that does, it literally gives me an idea of where sellers or buyers may be sitting. So for example, if I'm looking for a buy position, the thing that I'm going to ask myself now is, how far do I have to buy until we run into some sellers? How far do I have to buy until we run into some sellers? Or vice versa. If I'm looking for a sell position on the market, how far do I have to sell until we run into some buyers? Because of course, if I'm selling and we run into buyers and we hit a place where buyers are interested, it's going to of course make price bounce. That is something that I have been looking into. So I've been pretty much looking for supply and demand zones on a bigger time frame, and something that has been helping me so much. Oh my goodness. So let's go over it. Let's go ahead and get into it. Basically looking at the daily time frame, still going through the same time frames, the same. I will go to the daily time frame, and I see here on the daily that my daily candle is bearish. Okay, so of course, obviously your daily time frame is pretty much like, okay, summarize all together, this is what you need to be doing for the day. Price is definitely selling, right? So I'm like, okay, cool. Looking at this one daily candle, I can see that price is going bearish. For the daily time frame, I go to my 4-hour time frame. After that, the thing that stands out to me first is I immediately see that we have this 4-hour resistance that is overpriced. I see kind of like some equal highs being made here, and of course that is not really the healthiest market structure. Healthy market structure is a trendy market. Highs getting broken or lows getting broken. Either way is good, but making equal highs is not a good area for supply and demand traders. So of course I'm just going to go ahead and highlight this area of resistance, because that's what I would classify it as, a resistance area that price cannot obviously get through. Okay, so after that, pretty much see that price is on this little bearish leg. Basically, if I can put this together in a story of what's going on, price has tapped this area multiple times, we fail, price tapped it again, fail, price tapped it again, and fail even more. We just start running, and that explains why the daily candle is bearish. So it would make sense to go with the trend. But another thing that I've been asking myself, if I'm going to take a sell position, how far do I have to sell? It prevents you from taking unnecessary losses. Of course, you're still going to take losses, okay? That's just a part of it. But it keeps you from taking the unnecessary ones when you ask yourself those deeper questions. I'm going to be looking at an area, of course, that's going with the trend. Okay, price is selling. This is the 4-hour supply. This is the 4-hour time frame. So I'm going to simply mark out this 4-hour supply, so we can clearly see that this is an area that price had this big drop from. Price was kind of going up on a pullback, and then price dropped from here. So obviously a big tank came out of this area up here. So more than likely that is an area of interest for sellers in the event price comes back and revisit this zone. So that is option number one. That is what I see on the 4-hour time frame. Another thing that I see on the 4-hour time frame, like I just said, I'm always going to look for the opposite zone. Even though I'm looking for a sell, yes, because that's what the trend is doing, I'm also going to look for a demand zone, because we need to have some type of target. If I'm going to be selling, how far do I have to sell? So I believe from sometime last week, price made this demand zone over here on the 4-hour. And as we can see, the thing that drew me to it is because price never, ever, ever tapped this zone after that big rally to the upside. So basically price kind of made this little uptrend, we kind of consolidated, fell down, and then price fell in its resistance, and now we are actively in this area of this 4-hour demand. So of course, if this demand has not been tapped since last month sometime, if this zone was created last month and price has never tapped it and price is actively in it right now, that is kind of like a little danger zone for a sell, because we know that some buyers are sitting here in this zone somewhere, somehow. And we also can actually kind of see that price is not pulling back on this little downward trend. So that can be kind of like a inconsistent bearish trend, I would kind of like to say. Price is not pulling back on the 4-hour. It just looks like it's kind of targeting something. And as we can see, we can kind of see and kind of verify that it may be targeting to retrace the zone, to maybe grab some more buyers, and that's going to cause price to flip. So basically, going to look a little bit deeper, we're going to go ahead and go to the 1-hour time frame. Here, I'm still going to do the same thing, but I'm going to simply mark out my 1-hour zone that is within my 4-hour supply zone. So what that's going to do is just simply condense price into a smaller zone. I personally do not trade on the 4-hour. I don't even trade on the 1-hour, but more so look at this as like a highlighter. You're more so highlighting your answer to see where those high probability supply zones are sitting and which ones could possibly be liquidity, which ones could possibly fall through. What I would kind of see or kind of classify this as, I can definitely see price turning around down here in this area of interest for buyers, right? And potentially go to the upside and then fall down from this area, from this supply zone area. That's kind of like what I am kind of eyeing right here. Either bounce and respect this supply, or it could either bounce and go up and disrespect the supply and validate it and validate that resistance, whatever the case may be. You kind of never really know until price action shows you what it want to do. So yeah, that's kind of what we're waiting for, but I am aware that we are in the area of interest for buyers. So on a regular day, what I used to do, I would just like, okay, I'm going to trade what I see, and more so just go with the trend, go with the flow, and I'm going to focus on this little supply zone. I'm going to focus on just selling. I would have did that, but now I'm looking at how far do I have to sell. Okay, if that makes sense. You're just more so looking into the picture a little bit deeper to keep you from taking those unnecessary losses and keep you from entering in on a reversal when price looks like it still want to sell. I'm going to do the same thing on this demand zone. I'm going to go to the 1-hour time frame and just mark out my untraced 1-hour zones. And as you see, we have an untraced zone all the way down there at the bottom. And if we're thinking like from a buyer point of view, if we're thinking from a buyer perspective, we can kind of verify that it makes sense why buyers usually sit at the zone all the way at the bottom of that 4-hour zone, because it's like if you are looking from a buyer point of view and you're looking to buy something, if store A has a pair of shoes for $70 and then store B has the same pair of shoes for $30, wouldn't you go to the store that has the best price? That's going to have the lowest price because you're a buyer, so you want the best possible deal for whatever thing that you're buying. And that's kind of how I would think that the smart money industrial traders, the banks, kind of are thinking. So if they want to buy some NQ, they would possibly look for the best possible price, and that's going to be located deep within that zone. So since we kind of already boxed out the 1-hour, we can see that price is getting pretty close to that 1-hour. Right now, I'm looking for a sell position. That bias is kind of like, it's a little iffy. I'm kind of backing up from that thought right now. It was selling. It could have been a nice idea to sell on this white chart area. Now, since we are actively into this 4-hour demand zone, it kind of makes me pull back from the sell bias, basically. So now we're going to go to the 15 and we're going to continue to do the same thing. So now we're pretty much waiting to see at any given moment, this price could hit this 1-hour demand zone and just kind of bounce. And of course, when you're in a sell position, we don't really want to be caught in that bounce because price can reject and go the opposite way of where we're trying to go. So I would basically go to the 15-minute time frame and do the same thing, just basically condense the zone to a smaller zone. Okay, so as you can see, we have so many zones down here, y'all. In the event that I see this, I'm literally just going to be like, I'm going to stack the odds in my favor, and I'm just going to mark out all of them. And we can also see from the 4-hour, we got some rejection because price is already trying to flip and go. We can already see that price is trying to break these little minor highs here. So those are kind of like the signals that I'm kind of looking for that I would want to see once price is rejecting, and I'm like, okay, is there any buyers here? Because you still do have buyers and investors that enter on the 4-hour time frame, so that can maybe cause this spike, maybe cause these highs to be broken. I'm not sure, but we're looking for the meat part of the buyers. So go ahead and play this. Prices just tap this 1-hour zone. Prices just tap the zone. If we go ahead and play the candles and let them play, I'm pretty much looking for some type of reaction candle that closes bullish. And as we can see, price has sunken through this. Genkyud has showed his hands, and it showed that it just want to close bearish. So of course, invalidated that first zone, invalidated that one. I would just delete the zone and just look still for the same thing. Prices kind of fell, and that was probably like a good opportunity to sell up here at this supply. But of course, I'm going to be holding off on a sale because I'm just not comfortable with that once it is in a big major 4-hour demand zone. It gives a nice little sell position that takes off without me, so be it. But I'm definitely looking at the bigger picture, and if I'm looking for a sale, I don't want to take it and just be trading in the unknown. I definitely want to see how far I have to go. As we can see, price is still bearish right now, but in the event we get a bullish candle closure like this, for example, seeing that we have some bullish buying activity from this zone at the bottom, and we know that buyers are sitting here because buyers have not been filled since last month this time. And I was actually looking at this trade one day. I think we was looking at this trade on Friday with my Discord, but since it's still fairly new and since I'm still kind of getting like comfortable with trading like this, because this is more so the trades that's like can definitely funnel into more so like a portfolio. I definitely still doing the same thing. I want to trade what I see and not what I think, and things like this is like something new that I'm studying and looking into more so like on paper trade. So I definitely missed this trade on Friday, but we was looking at it and we was like, we should have taken this. It feels good to know that what you're studying is definitely working out in your favor if you would have taken it. Look, this thing just went absolutely crazy. If I go back and look at this trade, I think this trade ended up going for like a 1 to 16. Yeah, more so like your portfolio trades, like the trades that you kind of hold or kind of swing trade. And I told myself like earlier in the beginning of this year that I did want to get more comfortable and more into swing trading on top of my day trading. Again, I feel like day trading futures is like good for income. This is kind of like more so building a wealthy fat portfolio. It's like this, I would definitely set an alert. I've been doing it so far. I've been setting alerts and like entering on paper trading, of course, before I ever enter and touch my live doing this. But looking at this play out on Friday, it made me feel really, really good because it lets me know that I'm kind of getting on to something. So, hey, I had to pat myself on the back because it definitely went exactly how I could have imagined. And I still use this strategy, like this market structure. I feel like market structure and you're having a good entry goes hand in hand, because to take a good entry, most of the time, the entries do not be the problem. It really be failing to understand market structure and failing to understand where you are in the market. So I feel like mastering market structure and knowing where you are in the market with a really, really good entry strategy is like, how can you lose? Like, you're bound to kill it. The deeper I get into trading, I'm definitely telling myself more and more that I need to start thinking like the industrial traders. I need to start thinking like the banks, the industrial traders, and not more so retail traders. Retail traders is like, okay, price is selling, I'm going to sell and just go with the trend. I'm going to trade I want to think like the industrial traders, the banks and the institutions. I want to think like smart money. Of course, not changing anything from that I'm usually doing, but more so adding deeper thought process before I get into a trade. And if we're in the white part and we have this area marked out and it's just like, okay, you have time to sell before you hit those buyers, perfect. I'm going to be comfortable entering in for a sale because I know that I don't have any buyers approaching me until we get down at that higher probability demand zone. Share this with you guys because you never know how far it may go or who it may help. So this is just my little gem that I just wanted to drop. Try it out. If you like it, you like it. If you don't, maybe it's not for you, that's fine too. I just felt the need to kind of share this with you guys because I've been loving this so far. What do the YouTubers be saying? Don't forget to like, comment, and subscribe. Don't forget to like, comment, and subscribe. I'm gonna see you guys next time. Peace out.